when you and I were talking earlier, you said that 24 this year has been one of your busiest VC deal years. Talk about that a little bit and your background and what you are doing now with Greenberg Luxker.
Yeah, sure. Thanks. So just a slight tweak that I wouldn't say it's one of my busiest years. I think it's just been busier than the last year and a half, which were very, very slow given the interest rate environment. This year, though, I think, actually echoing off Andrew said on the M&A side, I will have closed more priced rounds by end of June than I did all of last year. We've seen some movement on the tech side and the consumer product side. I think we've seen people on both sides, both the issuer side and the investor side, having more realistic expectations on valuations. I think we've seen people pricing around and modeling around the interest rate uptick and no longer sort of pinning these deals on 2%, 3%, 4% rates. And I think we've seen people just sort of understanding and coming down to earth a little bit from the heyday of, let's say, 2015 and through 2020 with more realistic expectations of where the market is.
Talk a little bit about, I would think this sort of Y Combinator, these startup accelerators, why are they so important for the founders and why are they important for possible future family offices that do the investing in these young companies?
Yeah, sure. So thanks for having me. So Y Combinator or YC holds a special place in Silicon Valley because it has birthed so many incredible companies. Coinbase, Airbnb, a number of ones that Instacart, I believe, went through YC.
Yeah.
Started by Paul Graham and his wife, Jessica Livingston.
And you got Robert Tappan Morris, and you got Trevor Blackwell.
Right. So they they were effectively one of the first accelerators and by far now the most prominent. And, they run this sort of fund. And basically, their business model is at the time, for a long time, they would give $125,000 for 7% equity. That has now come up to almost like $500,000. And the equity is still about 7%. And it's a little convoluted, but a very rudimentary understanding is $500K for about 7%. So, look, there are a plethora of other accelerators, incubators, this, that, and the other. There are ones that are generalist or sector specific, but YC is the cream of the crop. They like to claim, and I'm sure it's true, that they have a lower acceptance rate than Harvard undergrad and everything else. And during the pandemic, they had increased their batch size. They do 2 batches a year. It went from being like the first batch, I should say, is what was like 2007, 2008, and Reddit was actually part of it.